Hello, everyone, and thank you for joining today's live stream. Today is a big day. I'm Tammy DaCosta, and I'll be bringing you the latest market updates. Now, if we look at what's happening in crypto at the moment, we can see that there has definitely been a bloodbath. And this has basically taken, we have seen prices really take strain throughout this month, but especially over the past week. And this not only, even though we have recently been seeing altcoins lead losses, this week has been particularly brutal for Bitcoin as well. And this is important because it gives us a better perspective of not only about the shifts in fundamentals and all of that, but also with regards to the fear that's coming back into the market. And that is basically impacting sentiment. And overall, even with risk assets, we have seen a pullback in recent days. So now what exactly is going on, and why is this important? If we look once again on, we can look at the charts for and the price trend, just even on the CoinW site, even if we just look on the right hand side, and then obviously we've also got the possibility or the option to change or to view 24-hour changes, the high, the low, and this gives us additional information on what's going on in crypto at the moment. So on a 24-hour basis, if let's go back to, okay, there we go. So prices are trading for the futures roughly 6.8%, 6.87%, excuse me, for Bitcoin, 9.29% for Ethereum. So these are already going towards double-digit losses. But this isn't only because often we do see that we are expected to get some important data prints out of the US later today, which would be core PCE. So, and then so basically personal consumption expenditure, and this is the Fed's preferred measure of inflation. So generally what happens is if core PCE, or if we can see that consumer expenditure is decreasing, this means that obviously people are spending less money. And this is important because not only does it impact the state of the economy, but it also impacts the potential for gains, especially when it comes to risk assets or anything. So risk assets, or when there's a risk on environment, basically we're looking at things like crypto and also stocks. And this is basically because in certain environments, stocks, or if their potential for gains outweighs, or if people have more money, then they may not want to put like all their money into, for example, a bank account. They may actually realize, okay, fine, we can get a better return from stocks or whatnot. And then when we see how the implications of this, it's also, if we look from a risk perspective, basically they also saying in hindsight that, okay, even though, for example, something like trading futures, even though that may carry more risk, it also comes down to a whole risk reward debate. And in those situations, because they now have excess money or free money, then they start saying then they can actually afford to invest or to trade. When things start getting tighter and the economy starts contracting, then we see a different scenario. People don't now have excess spending, they basically, they're only spending on essential items. So this is a very different narrative to what we saw last month. And to put it in perspective, it is only 6 weeks since Bitcoin actually reached its all-time high, which means it's only 6 weeks since Donald Trump has, well, basically since his inauguration. And that's massive, or this is essential because of the fact that we see that all that optimism that, well, basically following or in the build up to his inauguration, that has now dissipated. And so now we're seeing a change in rhetoric, and this is not casting a positive shadow, or it's not painting a pretty picture for the likes of crypto. Another aspect to take into consideration is what drove the initial rally in these cryptos leading up to that, following the election, leading up into the inauguration. And in his campaigns, we know that Trump was very pro crypto. So he even said he wants to be the crypto president. And initially, this boosted sentiment. Bitcoin, Bitcoin tested, and this was on the day of the inauguration. It went as high as 110,000. And now, as of today, we actually, after breaking below 90,000, we now see prices today struggling to actually remain around, they're struggling to actually stay above 80,000. Another key psychological level. So this becomes important support, but it is important for a number of reasons. And to me, 80,000 has been a critical level. Why is that? If we now look at our charts, and we can go to trading view. Now let's look at what's happening here. Right, so if we go to the daily chart, okay, I'm just going to remove these indicators currently. Okay, we can even remove this. So if we're now looking at the daily chart, and this is for the futures, what we can see is preceding the elections, we saw that Bitcoin, there was a gap higher, which I've spoken about on numerous occasions. And this is because on the futures chart, it doesn't show the weekend trading. Now, if we take into perspective that, okay, let's go look. And then let's also change this to see our data. So now if we look at where prices closed, and this was the Friday of the election. So the election was on the 5th of November. Then you had the 6th of November when it was announced. Bitcoin actually shot up prior to the announcement. It had been struggling, or it had been attempting to break above that 69,000 mark, which was the high back in November 2021. And this really gave it a boost in sentiment, because during his campaign, Trump was, as I said, he is very pro crypto. He did say, okay, there's going to be deregulation. And if we look now, yes, we have had him say that, like, we have had the SEC drop several cases against crypto exchanges and investigations, such as the likes of Robinhood, Coinbase, and OpenSea. So this now is positive for crypto. But since then, and we've also seen him talk about a potential strategic reserve for crypto. But since then, there hasn't been many developments. So it's still, everything was already priced in, and now the perspective is getting a bit dim. And that optimism is now fading. So prior, as I said, the Friday of the announcement, so he was announced president on the Tuesday. This is on the Friday, and this is where prices, basically the high was 77,930. The close was at 77,360. On that Monday, then we saw an open at 88,735. So already there we saw a big jump. Prices didn't even hover by 80,000, they just made a clear break. And this is called a gap. Now, when this occurs in a middle of a trend, you get different types of gaps. Okay, but this is important because since then, that gap hasn't been able to get filled, which was a reflection or an indication that that bull trend has still indeed been intact. Now, if we're looking at today, we can see that now prices have hovered, and this was the, remember, this was the low at 80,670. Currently, we saw currently the close of the daily candle at this time is at 80,850 with the low at 78,675. The high of that Friday on the 8th of November, that high over there was 77,930. So now if prices actually manage to drop and pull and there's a further correction, then that optimism or that move following the election is basically wiped out, even though from the 6th of November, which is when there was that announcement, or let's take it from the 5th, then we would still be in an uptrend, but now we would have additional layers of support that could actually drive prices back to the levels that were seen pre-elections. So this is important because we're definitely seeing that shift in sentiment, and we are definitely seeing that a lot of those gains from crypto have been wiped out, and this also is an indication or potential warning that the whole outlook of the economy is not looking too great. And we have seen that. We've seen consumer sentiment basically drop to lowest level since 2021. So the outlook on the economy, given the fact that Trump is still on his path, he's still very much committed to the to basically tariffs and to protecting companies in the United States. But this also poses additional risks in terms of geopolitics. So there is still a lot happening in the background as well. We're still in a high interest rate environment. We have seen job data that has been a lot weaker. And we've seen that inflation is still high. And now those tariffs, what could happen is, and this is where a lot of the fear comes in, what that does is if there's additional tariffs, it makes goods more expensive. So if I am based in the USA and I am now importing goods from Canada, Trump has already said those levies on Canadian products, Canadian and Mexican products, goods, they rising by 25%. And that will be from the 4th of March. So already that's massive because a lot of the USA or a lot of companies and businesses import products from these countries because it is cheaper in those countries to actually manufacture. And now Trump is saying, no, actually, we should promote the goods being made in the USA. And he's also wanting to negotiate better terms of trade for the USA. Canada has, and quite a few countries, including China, because he's announced a 10% tariff increase on all goods, and that was last month. And now he's also basically said there's going to be an additional 10% of tariffs. So tariffs are definitely the name of his game, but this has an impact, or the whole reason why this is important is because now, if the prices of manufacturing those goods in the US also means that, we're not getting so many imports from these other states, but there's a reason that those imports were there in the first place, which was because it was cheaper to get in those countries. So now, if they have to either pay that additional 25%, then what happens with those costs is now now things have to get more expensive. Their cost of production gets more expensive, and that's when we often see now companies trying to pass on those those additional costs to consumers. As prices then rise, that's a direct threat to inflation, which has been what central banks have been struggling with since 2022. Or actually, it started like showing its ugly head in 2021. And that was a very low interest rate environment because of the COVID pandemic and the stimulus measures to promote economic strength. But then we had additional issues that came into play. And so we had inflation. And that's what the central banks have really, really been focusing on. And so since those low interest rates environments, we've had global central banks really raising rates. And so even globally, although there have been rate cuts over the past few meetings, it's still, if you compare the US Fed funds rate in 2021, let's go with November, even then, the Fed funds rate was 0.25%. And this is the main interest rates at which banks will borrow funds from the central bank. Now, if we look at the Fed funds rate, even though we've had those decreases, it's still at 4.5%. And when banks are paying increased interest, then what happens with other interests on loans and mortgages is, once again, those also have to go up. So there's definitely been a change in the dynamics. We've also got that change in presidency. And once again, even though now we have a lot more stability in the likes of the crypto exchange and its potential, that outlook is still positive. But in the short run, that demand, because we had also seen an overextension of that optimism, and then once again we got a pullback, we got that all-time high, and this was our previous key level. We could see that prices on the 25th of November closed at the support level, and then for a while prices were attempting to, this was acting as support. And then we get the 25th of Feb, and we already see we got that break lower. So already starting the week, or even from Friday, already we saw, and this comes into sentiment as well, Michigan consumer sentiment also came in weaker, and we saw this fear then starting to show in different classes of assets. We've also seen the VIX, which is known as the fear-based index. It's the volatility of the S&P 500. We saw that also rise dramatically. In the election period, it was roughly around 15. It is now sitting at about 21. So there has now we're seeing, okay, the economic perspective might, or the economic outlook may actually not, may not be as optimistic. And this is where the fear comes in. And then we see a more cautious approach to these various markets and to trading and investing as a whole. So these are factors that have played a role or are busy playing a role. And once again, if we look at altcoins, and what's also important is, remember, at one stage, basically the crypto market cap, or the total crypto market cap, was sitting at roughly around I think it peaked at roughly $3.8 trillion, which is huge. And since the election period, it's only this week that the market cap actually went below that $3 trillion mark. And this was also a very important indication or representation that actually the trend is now turning bearish. If we take the measure, or if we measure the move from that 21st of Jan high, and we look at today's low, it's a 28.57% difference. Even though we don't really have like figures, or it's not factual on when the primary trend is actually changing. Generally, we look at roughly 20%. So this is now also representing that there may be a shift in the primary trend. So these are all big levels to watch, because the potential for them impacting Bitcoin, and altcoins generally follow Bitcoin, so the potential for them having deeper implications then rises, and now we have to adjust our strategies. So in periods like this, I do take a more cautious approach. So I may not be scalping as much, but this is it's a very uncertain period. Then on top of that, next week we also have employment data, and these are important figures to look out for. In terms of the US, we also need to remember that the inauguration was the 20th or the 21st of Jan, and no, it was the 20th of Jan, sorry. And now, if we basically look back, there's the figures that we got last month were still under the Biden administration. These will be the first prints that actually reflect what's been happening in the different sectors under the Trump administration. In terms of employment, if we look at some of the policies that Trump and Doge, Elon Musk and the Department of Government Efficiency, some of those, or a lot of their battle, or their approach to taming inflation and cutting the budget deficit, is also on actually reducing a lot of employment costs, especially with regards to the federal governments and so forth. So this might actually show up in employment data, although I'm more concerned about what happens in March, when all those tariffs actually, when a large portion of those tariffs start coming into effect, because that is likely, if we then see higher unemployment, it's showing that optimism is now being reduced. And it also shows that potentially, if businesses are doing labor cuts or job cuts, that is showing that they are now struggling as well. So there is definitely a knock-on effect. This is, as I said, this is a key level for me, which I am watching. Now let's look at the momentum of the trend. So let's use RSI. And then so now this is in line with this downward trend. From there, we can see there was already divergence, well, slight divergence because there was a consolidation. But this is showing that since that Jan high, yes, this trend line resistance, well, this trend line is now trend line resistance. It has been touched 1, 2, 3. And as long as prices are below that, the trend is now, this shows that the imminent trend, since it's on the daily time frame, has now turned bearish. So resistance is still a strong, or at least this prior resistance, and 95,700, we could see that period of consolidation as well. So this was an important zone. And once it was broken, we had spoken about generally when there's periods of consolidation, the longer the period of that consolidation, the stronger that zone. And once momentum at one side, whether it's buyers or sellers, once the bulls or the bears gain traction, then we often see something like a situation like that, where we saw a break of, we saw a break of 93,990, and then it was basically it's been a free fall since then. Now, if on the upside, we have roughly 87,000 as resistance. And this, once again, if we look at the 11th of November, the open, that was already 89,140. We've already fallen below that. The RSI is also showing, okay, that now the momentum is turning bearish. But if we look here, we can see that it's actually fallen below the lower band. So this is a range band oscillator, which means that it generally ranges between 0 and 70, whereas if it is 0 and 100, anything below 30 is considered to be, well, it's a potential indication that the trend or the move may be oversold. And this is what we're getting now. So it's threatening the oversold territory. But if we look at the fundamentals and so forth, and the excessive move or momentum of the move between the post-election and the high, then it does make sense that we were going to see a retracement, but the next move is obviously essential to see what our outlook then becomes. Now, let's go to, the total market cap. Is that the total? Oh, sorry, that's the DeFi dominance. So total crypto market cap is now 2.61 trillion. If we look at the change, it is down an additional 5.4% in today's session. This is not a pretty outlook, but there have been some coins that have benefited, such as some stable coins, but we're not seeing, they are quite few and far between. The volatility index has now, the percentage move is 10.3% today. So it's showing that fear in the crypto markets is also increasing. And then there were also reports that this week has seen, with regards to crypto exchanges, the largest outflows in crypto exchanges, showing that sell-off and showing that a lot more investors are cashing in. And yet we saw, or it was reported, the biggest inflows in gold. So this is reiterating that pullback in optimism, or at least in the build up to those expectations of all those policy changes. And gold has definitely been an asset that benefits. Not only is it an inflation hedge, it is also often considered or perceived to be a safe haven, or it has safe haven appeal. So when gold and the likes of precious metals and a few other assets, when those prices start rising, it is also a indication of a more risk off approach and a more cautious approach now to the markets. Looking at Ethereum was also a big one for me, because one of the factors that could also have impacted Ethereum prices is we did have a Bybit hack, and that was mentioned this week as well, and it was roughly about $1.5 billion worth of crypto, and a large portion of the coins that were actually taken were Ethereum. So that has also knocked sentiment. Ethereum, we haven't, even till now, we haven't seen those same gains or the same momentum of the gains that we have seen in Bitcoin. So it has been already showing that altcoins, even though they have attempted to rally, they haven't really been successful. Let's look at Ethereum. So looking at Ethereum from the December high was 4,142.5, and it's, well, it may be worth noting that Bitcoin, even though that rallied throughout January towards the inauguration in 2025, we haven't seen, well, Ethereum hasn't been able to actually break through these highs. So even since December, the prices, or relative to Bitcoin, it has been under pressure. Now we saw a downward gap, and Ethereum's price action is actually, to me, like, I really enjoy analyzing this chart. So I do use Fibonacci. I've discussed it on numerous occasions. And I've taken the high, well, the Fibonacci I've used is from the November 2021 high, and this would be the January 2022 low. And I've used this Fibonacci because this is important, as it is also seen. For example, we saw this massive move, and then we see that since then, these levels, especially, for example, here, this has provided a important zone of both support and resistance for Ethereum price action, and it's actually not that far away. So the next big level to watch would be 2000 mark, and that would be close to those 2024. This was Jan 2024, and this was when prices reached a low. Let's just see, 2,221. So this is basically the low since 2021. And we haven't actually tested or retested these lows since then. This is once again a very important indication that, we might have further pullback to go. And then this would be, it's already in an official bear trend, but if we do see, we've seen a break of 38.2% retracement of that move and the 50% move. So this is already, we're seeing about like 2/3 of that move or the prior move that's been already retraced. And this is another important factor or an important consideration. Okay, just like Bitcoin, the RSI, this does show that there has been strong selling pressure and a strong and justified, according to the momentum, it has justified. Basically, momentum has been the momentum of the downtrend has gained, and that is reflective in the price action. So looking back once again, from, for example, August 24 to the to August, well, basically August, let's see, the 2nd of August, on that Friday, and then on the Monday open, once again, we saw a gap lower, indicative of a bear trend, and then we saw a gap higher. Now, see, it is at the 50 or the midpoint of that 2021 to 2022 or 2022 move, and we saw a gap higher. So this is when there was a shift back into a bull trend, and then since then we have been looking for a sign of further a broader sell-off and that change in trend, and we have only recently got that. So prices since the November, yes, that is what triggered or re-triggered the bull trend. And now recently, as prices or after attempting to retest or to break above the 61.8% retracement, which is also, was prior trendline resistance, prices basically moved. We saw that gap that pushed prices or erased a large portion. This is already 11.8% of this, the previous of that bullish move. And this was an indication that, okay, now things are turning more sour. And then more recently, we saw another break lower. And this is showing, okay, we haven't filled that gap, which was already bearish. Now we have not filled that gap. This was also a clear zone of consolidation. And then even though this was basically a spinning top on the 25th of Feb, prices at one point were down, I think, 18%. And then they still bulls managed to actually pull prices back higher. But since then, we've had the rest of the week that we have seen those full red candles showing that, okay, bears are now back in control. And now our perception or our outlook turns more bearish, but this zone, or especially the 2000 mark, is now really, really critical, especially if we're looking at the further moves or potential moves. Let's look at liquidation, or we look at the trends. This wasn't. Apologies. Okay, so let's first actually just look at banter bubbles, because I was actually going to show you the liquidity heat map, but that's on another screen. If we look at, okay, banter bubbles, this is stocks. But even for stocks, you can see for the week, there's also been a lot of pessimism now coming into the market. Nvidia, even though there was, and Nvidia is a really, really important stock and sentiment indicator, because we know artificial intelligence has also been driving those gains that we have seen in the US, especially US big tech. And Nvidia has been a leader of that, of both the S&P 500 and the Nasdaq over the past 2 years. And it's been justified because there's been such a strong adoption for artificial intelligence. So this week's earnings, because of it is also the second most valuable company worldwide now, with a market cap around, it's also roughly around 3.2 trillion, which is not a small number. And that means Nvidia has a large weighted, percentage weighting in both the S&P and the Nasdaq. However, as I said, it's not only about Nvidia and chips, it's also about sentiment, and it's about what the future outlooks, and especially with regards to these potential tariffs, what implications those can have on companies. So even though Nvidia earnings once again beat estimates, we have seen, especially yesterday, following the earnings, because the outlook was now a lot more dismal, we have seen that stock also fall off, along with quite a few others. Now, if we move to crypto, okay, Pi is up 227.25%, but that's also recently been listed. And then there have been, RP has also been, is also trading higher for the week. But then looking at the others, okay, we get Flow, MKR, but it's clear that if you look at the screen, it's a lot more red. And there are a lot of, most of the coins are in double-digit losses as well. So this actually, okay, this one's not. So this is, and a lot of them are nearing roughly like 30%. So this is huge, and it is a very, very clear indication and representation of fear coming back, and also potentially a lot of those traders that actually bought into the rally have now, many of them, especially retailers, have now been liquidated because they don't have the capital to actually be able to keep afloat during this period of sellers, or of the sell-off. So there's a variety of factors that have also been influencing this trend, or at least the change in trend. And this is now, I am more, this to me opens the door for more of a bearish pullback. The other important thing to bear in mind is the fact that generally, if we look at trends, and we look at a lot of the prior moves in these trends, for example, okay, look at the weekly over here. So we can see through March, okay, 2020, and then to the April, we can see that prices, at first, they slowly started to climb, and then we did see that breakaway. But when there was a downtrend, so if we measure this move, okay, if we measure this move, it was 1,456.29%. And this occurred, or this move occurred in roughly a year, well, 13 months, over 13 months, which is massive. But as soon as there is that fear now in the markets, and we saw from April, and then let's go now to look here, actually. Sorry. Okay, basically, a lot of the times, if you are looking at the selling or the rate at which prices decrease, we need to remember that fear is also a major driver of price moves, and often, or more often than not, the selling pressure or the rate at which prices decelerate is a lot more progressive than the rate at which prices increase. So this is why when we do see these sell-offs and these like overall primary corrections in the trend, a lot of the times the fall is a lot faster than the rise. We need to be vigilant of that, especially after this week. Prior to this week, we were still fairly optimistic, even though we had seen those corrections starting to play out. This week really solidified it and solidified the change in sentiment. So these are all things that I will be watching, especially these, as I said, these key levels. I mean, from 6 weeks, you can see how rapid this decline has been. And okay, this increase was also quite rapid. So this is from the 11th of November and then 21st of Jan. But already now, over just 6 weeks, we've wiped out this move. So there's also quite a nice pattern forming. If we see this, this is, okay, it's pretty much like a double top, we can call it that. And then now we see that prices have now broken the prior support. So this becomes really, really important, especially the gap for the next move. Prices are now also trading below the 20-day moving average of 81,904. And the next, a lot of analysts are saying that the next big level of support is at the 50-day moving average, which is 74,952. Okay, we can see that here. So even between there and there, it's still a while, it still is $10,000, or let's see here, no. Oh, sorry, this is actually 75,182. So we still have roughly $4,000 to play with, but definitely, this is also, if we look at this peak here, and this was 11th of March, and this was when in 2024, before the elections, this was crypto's high, and it was also a break above the prior high of the 2021 high of 69,000. And then as soon as prices rose above that, then we got that pullback. The 50-day moving average back then acted as support, and then the 20 period as resistance, 50 resistance. So we have seen these levels or moving averages also assisting in the move, and then that high there, and then the pullback. So these are also important because now, since prices have fallen below the 20 period moving average of 89,804, we see how quickly, or basically on a weekly time frame, prices are now trading 18.89% lower. So we see how that zone of consolidation, how quickly they break out, and just how extensive that pullback actually was. This, as I said, next week I think is going to be really, really important, and so is today. Just be really, really vigilant about that inflation data, which is coming out in roughly round about, well, less than 2 hours time. So those inflation figures will also be important. Even though we've got a lot of it priced into market, it all depends, especially if inflation comes down lower, which is highly unlikely at this point in time. But if those, or their core PCE number, if that is showing that consumers are under pressure, then that could also induce additional fear. And especially with regards to when these big newsprints and the high impact newsprints are released, then this is a major driver of volatility as well. So let's go to the news tab just really, really quickly. And this would be, okay, let's move that. Okay, actually I should be able to see it even here. Okay, now suddenly my brain's not functioning. Okay, let's do this. So now if we look at the economic, as I said, the high impact economic data, this is on TradingView, and we look at today's date. This was so far, there have been quite a lot of data prints in terms of inflation. We've had inflation data out of France, Italy, and then now we are also getting inflation data out of Germany. And this is also important because of the fact not only has Germany recently had their elections, but that will only, once again, these changes in like government, and that because these indicators are backward looking, we're going to have to actually wait to see how the changes in policies and in governments also what their implications or ramifications are on prices. So the important thing, but Germany is still Europe's largest economy, so this is also going to be an important data print, or at least the figures to watch, as they will also contribute to the interest rate narrative of the European Union, who will actually have their rate decision next week. Core PCE, okay, and we've got personal income. Okay, so personal income and personal spending, obviously income is your income, how much you're earning and what the households are bringing in. And that is expected to come in at 0.3%. That would be down from 0.4%. So some of that slowdown in economic growth is already getting priced in. And then if we look at personal spending, this is huge though, because even though while at this point we're looking at, or we expecting a slowdown or reduction in personal income, but then look at personal spending. That is also expected to be reduced, but a lot, the move is much bigger. So from 0.7% to 0.1%, that's 0.6% difference. And this is now showing, okay, cool, personal spending is now depreciating at a rapid pace, and this is reflective of fear and that economic uncertainty. And these, if we look at core PCE, which is the Fed's measure of inflation, that is now expected to increase to 0.3%. And if this is the case, or we see a higher print, then this could mean that the Fed is more likely to keep interest rates at their current levels, which they have said that they're not really in a hurry to cut rates. But when we've got economic slowdown and still interest rates and high inflation, then it does bring in the threat of stagflation, which means you're getting economic contractions combined with high inflation. So this basically opens the door to a recession. So these are all important, not only for crypto, but global markets. And then we see Canadian GDP growth rate, which is also expected, although that's forecasted to come in at 1.9%, so 0.9% higher. So that's going to be, if this is the case, it's going to be positive. But once again, we also bearing in mind that those 25% tariff increases are due to take effect next week. And those may also, well, a lot of that sentiment is now also getting baked in to inflation expectations, as well as, for example, GDP growth for Canada is largely, it's reliant on US, and basically it is a major exporter of goods to the US, accounting for more than 20% of Canada's GDP. So these are important considerations, and we will see basically what the sentiment is. We've had sentiment indicators and so forth already showing that there's the fear, but especially when these prints come out and the initial reactions, that does really, really cause volatility. And a lot of the times we see that volatility leading to really, really big moves. And that's why risk management is so prudent during these periods of time. So just be aware of that. And then we are out of time. So I will catch up with you next week. I hope, well, on Monday. I hope you all have a fantastic weekend. Be safe, and I'll see you then. Happy trading.